Hello, welcome to the look ahead for Thursday, the 23rd of November with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow there are no major earnings that we'll be watching out for. Do remember it is Thanksgiving bank holiday in the US, so the US stock markets won't be open. Volumes may be low in Europe as well, but there are still plenty of things to be watching on the economic calendar. We'll be starting with Eurozone PMI data. Now, Eurozone PMIs have been notably weak in recent months. We've seen them in contraction in the second part of this year so far, and that's not been boding well for economic growth in the region either. Now, expectations are for both the service sector and the manufacturing sector to see ongoing contraction in November, but the contraction is expected to be at a slightly slower pace, suggesting maybe there's been a bottom that's been put in there. As well as PMI data, we'll also be looking at the release of ECB minutes, or the minutes from the latest ECB meeting. That latest meeting was actually in October. So the meeting minutes are being released quite a lot later than the meeting, which does mean that they have the potential to be out of date. Let's just remind ourselves that in that meeting in October, the ECB hinted that they could be at the end of their rate hiking cycle. Now, what does all this mean for the euro US dollar? Now, we've seen that the euro US dollar has been rising since since the beginning of October. It's been trading in that ascending channel. It broke out quite violently mid-November, rising above the 200 SMA. This has been a lot to do with dollar weakness rather than necessarily owing to euro strength. And dollar weakness comes as the market has been increasingly certain that the next move by the Federal Reserve will be a rate cut rather than another rate hike. So the pair rose above the 200 SMA, hitting resistance around 109.65. That's become the level for the buyers to take out in order to head towards the 110 level. As far as support is concerned, that 200 SMA around the 108.20 mark is pretty key. As I said, the euro's down, but it's not out. I think we need to move below that 200 SMA in order to negate the near-term uptrend. Also tomorrow we will be watching the PMI data for the UK. Now again, the data is expected to show a contraction for both the service sector and the manufacturing sector, but the manufacturing sector is expected to contract at 45. The level 50 separates expansion from contraction, whereas services at 49.5, so just tipping into that contraction level. Now, the pound has been in focus today after the Chancellor's autumn budget. I think key takeaways where the OBR has downwardly revised its growth forecast for 2024. Not so surprised, they were rather optimistic, I think, in the spring budget at 1.8% growth. So we're now expecting 0.6% growth in 2024, which is more in line with what the Bank of England is expecting. The budget did have a few giveaways, nothing really major, nothing that was going to cause any concerns as far as inflationary pressures were concerned. The big problem that the Chancellor is facing is growth, and he was looking to inject growth. However, these measures aren't going to be really enough to inject any major growth into the UK economy. That's probably, we'll be looking more towards those measures in the spring budget next year. As far as the pound is concerned, again, it's been performing pretty well against the US dollar, capitalizing on that US dollar weakness. It's just about managing to hold above the 200 SMA. That's where the key support is sitting at the moment, and that's at 124.50. Buyers are going to be looking to push above 125.60. That's the weekly high, also that rising trend line support. Just finally, the last points to be watching tomorrow will be the Japanese inflation data. That's expected to see Japanese core inflation is expected to rise just slightly to 3% year on year, up from 2.8. So I hope you've enjoyed what you've been watching. If you do, then please give the film a like and also subscribe for more videos like it.